A detailed investigation claims Debitum insiders are pocketing 34% on every euro invested in forest land. EstateGuru's German recoveries continue to disappoint. Esketit's communication raises more questions than answers, and Nectaro publishes its latest financial report showing impressive growth. Welcome back to another P2P platform performance update, where we will evaluate the changes in the portfolio quality across some of the most popular P2P lending platforms. We will also cover important developments that may increase your risk in particular companies. As always, nothing in this video is intended to be investment advice. P2P lending is risky and you should regularly monitor the latest events surrounding your portfolio to make more educated investment decisions. So in this table you can see how the industry has performed over the past month. Mintos continues to operate as the largest platform we report on. The outstanding portfolio sits at around 654 million euro with over 122 million in recovery, roughly 19% of the entire portfolio. Funds in recovery remain largely unchanged. Mintos released 2 updates in the last month, one being that crypto investments are now available on the platform, and the second feature are the investment plans, which automate your top-ups, allowing you to passively invest on the platform based on your preferences. Mintos is clearly steering away from loans, which brings up the question whether the platform will have enough resources to recover the remaining 122 million euro in defaults, or whether it will just write them off as losses for investors. EstateGuru's portfolio stands at roughly 200 million euro, and over 60% of it remains non-performing. There has been no recovery in the non-active markets since last month. On the German front, investors should expect gradual case-by-case resolutions, not a rapid repayment. Recovery timelines remain long due to legal processes, tight financing, and weak liquidity. EstateGuru resolved 7 loans over the past year and expects 3 to 5 additional resolutions within the year. Realistic outcomes often mean sales at around 50% of appraised values, especially for higher risk assets. On the positive side, EstateGuru funded 6.59 million in new Baltic loans in March. The slight increase in funding volume is a good sign for investors, however expectations about the German loan recoveries remain low. PeerBerry continues to operate in a stable manner, reporting excellent performance with 0% of funds in recovery. The outstanding portfolio increased slightly to around 120 million. PeerBerry added 2 new loan originators for investors. Basel LTU now offers 90 to 180 days business loans at a 8% interest rate linked to an Aventus Group poultry factory project in Tanzania. Spain-based Real Credito also launched short-term loans with a 9% annual return. Both come with a buyback and group guarantee. The increase in loan availability is a good sign for existing investors, although supply remains limited compared to the demand. Robocash's outstanding portfolio remains stable at around 67 million euro with 0% in recovery. The platform introduced minor updates to the investor dashboard, but nothing major in terms of new features or transparency. Robocash is expanding the volume of 3-year Singaporean loans with a 10.5% annual return to keep the demand and supply balanced. InRento continues its expansion and has now entered a new country, Romania. The portfolio stands at over 61 million euro and continues to perform with no delays. The platform also did some nice updates on the statistics page, giving investors even more transparency. Now let's move to Esketit, where the portfolio increased slightly to around 47 million euro, mainly because most investors' funds are locked in until the end of their loan terms. Funding volume is pretty low at the moment. According to the latest platform statistics, they funded only about 1 million euro worth of loans over the past month. When investors questioned the communication from Esketit that 30% of the Irish portfolio would be repaid in March, most investors understood this as an early repurchase, but in reality, most of the 30% were repaid under normal loan terms. This means that if you had a 10k portfolio and expected 3k repayment, you would likely be disappointed. Esketit's reply was that the 30% referred to the overall platform volume, not individual portfolios. The current CEO also went on a podcast giving some insights about what's happening behind the scenes. She confirmed that Esketit is in talks with the Latvian regulator to obtain a lending license for a completely new platform. Whether Esketit will continue operating in a non-regulated environment when the new platform is launched remains unclear. Currently, funding on the platform is slow, communication is questionable at best, and the future of Esketit is unclear for most investors. The platform is trying to increase funding through cashback incentives, but based on the data, it does not seem to bear much fruit. Trust has decreased significantly over the past year, and the current CEO does not seem to have a clear plan to rebuild it with the existing investor base. During the interview, she said that during the transition to Croatia, they were evaluating all options, yet they decided to give just 7 days notice before freezing all liquidity tools. In my view, this is not a platform to invest on in 2026, as there are much better opportunities on the market. Afranga reports significant growth last month. The platform currently offers loans from Bulgarian lenders with loan terms between 12 and 24 months and interests from 9 to 12%. Indemo reports an increase in the outstanding portfolio to around 27 million euro. The platform continues to offer 5% cashback until the end of April. They also updated 7 flow stages and repaid another loan, with annual returns ranging from 15 to 18%. Nectaro reports growth in the outstanding portfolio, now at around 24 million euro, mainly driven by ongoing cashback campaigns for ABL loans. The platform also published its latest financial report, which is worth looking at. Revenue jumped 5 times to 368k in 2025. The assets under management hit 19.5 million, that's a 430% increase. The net loss widened to 1.43 million due to higher tech and hiring costs plus 680k in marketing spend. With a 3.9% fee and a current growth rate, a near-term break-even outlook is realistic. The CEO also recently confirmed that the secondary market is no longer a low priority, with project start planned for the second half of this year and implementation targeted for 2027. Nectaro is also exploring new asset classes, focusing on real estates in Latvia and Europe. Management also noted that adding potential guarantees or liquidity features would likely also reduce the current high yields of around 14% on consumer loans. Fintown's portfolio remains stable at around 18 million euro. I recently had an insightful call with the CEO where I gathered project updates and discussed my concerns with the lack of transparency. While there are plenty of risks to consider, the CEO seems to be aware of them and always has an answer on how to mitigate those risks. Fintown is not a perfect platform, there is plenty of room for improvement, but when it comes to a one-on-one discussion, the CEO does not hesitate to answer my questions, nor does he try to distract from key points. To learn more about the latest developments, you can read the article with the highlights in our Academy section or watch the raw interview directly on our website. Triple Dragon Funding reports a portfolio of around 8.7 million euro. Growth was solid, although it slowed down as soon as the cashback was removed. The founder also gave me some recent feedback on the topic of AI and the war in Iran. Triple Dragon sees AI as a cost and efficiency benefit, as it can lower prototyping, concept art, and mobile user acquisition costs, while hit games still depend on gameplay, community, and discoverability. The Iran conflict is not affecting the demand as of today, and if higher fuel costs curb travel, some consumer spending could shift towards at-home leisure, which may actually be marginally positive for games. Income Marketplace added loans from a new lender in the Philippines, offering 12 to 13% yield with short-term loans ranging from 1 to 3 months. The portfolio stands at around 27 million euro with about 550k, with the status buyback initiated. Crowdpear reports positive news. The T11 project has been fully recovered following a collateral sale. After legal and recovery costs, about 97,000 euro, including interest, has been distributed to investors. This reduces the total outstanding recovery amounts from 496k to 393k, now representing just 2.3% of the total portfolio. Now let's talk about Debitum. The portfolio increased to around 61 million euro, and there's been yet another management change. Shareholder Ingus Salmins has been appointed as CEO, replacing Anatoly Sputna. But the big story this month is the detailed investigation published in March, claiming that insiders on the platform are taking roughly 34 cents out of every euro investors spend on forest land. The core allegation is that most of the platform's volume flows through a network of related companies, all tied to the same family, that buys cheap forest land in Latvia and resells it to the investor-funded entity at a significant markup. Debitum pushed back. They say the criticism misunderstands how forestry works, that public land records only show the land price, not the timber value, which can be the majority of what a forest is worth. They also commissioned an independent valuation on just one property to support that point, and they corrected 2 factual errors in the original piece. But the follow-up response argues that Debitum still has not answered the key question: where exactly did the money go? There is no full breakdown between land, timber, fees, and related party margins, and 12 out of the 14 alleged false filings were not even addressed in their reply. The related party risk has already been covered in our Debitum review on P2P Empire, so this may not be news to you. If you are still exposed on the platform, it means you decided to ignore earlier identified red flags and risk warnings. And this is yet another warning you should consider. The platform did not provide clear independent evidence on how assets are valued and where the money actually flows. If you decide to accept this risk, that's on you. For serious investors, I would encourage you to read through the documents and make up your own opinion. And as it usually happens, instead of addressing all concerns, Debitum decided to launch a cashback bonus. This is a classic playbook used by countless platforms to bury red flags and increase funding volumes. Moving on to VIAINVEST, which manages around 60 million euro with about 2.9 million euro in recovery. TWINO decreased its default rate by buying out investors with exposure in Russia who wish to sell their loans at a discount. The total investor loss is not publicly disclosed. The portfolio currently stands at around 37 million euro with about 2.3 million euro in recovery. LANDE's outstanding portfolio increased to nearly 30 million, but so did the default rate with about 2.1 million now in recovery. I plan to have a call with the LANDE CEO in the upcoming weeks to discuss the current developments and geopolitical impact on farmers. So if you have any concerns or questions you want me to cover, drop them in the comments below. Capitalia's default rate increased with about 3.2 million in recovery. On a more positive note, Capitalia will soon offer Europe's first Invest EU-backed crowdfunding loans targeting Baltic SMEs with a 50 million euro portfolio. The default rate on Insoil finance continues to climb, now at nearly 22% of the outstanding portfolio. Renus24 remains in wind-down mode, with the entire portfolio of roughly 26 million in recovery. There is no new information available. Swapur has appointed a new CEO, Igors Boruks, succeeding Indrek Poldoikainen. On Swapur, no performance update was provided in the past month. The rest of the industry does not publish much performance data, and if they do, it's outdated, so there is not much to report about. The takeaway from this month is clear. Platforms continue to use cashback bonuses as a tool to distract from underlying issues. Whether it's Debitum launching a cashback campaign right after a serious investigation, or Esketit trying to attract funding while failing to communicate clearly with its investors, the pattern is the same. High yields and bonuses are designed to keep funding flowing. As an educated investor, your job is to look past the marketing and evaluate the actual risks. So that's it from this month's update. If you have found this video helpful, hit the like button and subscribe for more updates. Thanks for watching, and I will catch you in the next one.